Hello, madam. My name is Jani Anangatan, and here is my group member, which are Amoseli, Zihui, Wonyi, and Join. We would like to present about a case analysis of Petronas versus Royal Dutch Shell. So here, I would like to present about the introduction of the company. Firstly, it's about the background of the Petronas. Petronas is the acronym to the Petroleum Nasional Berhad, and it is a national oil company from Malaysia which was established in 17 August 1974. It is a corporation vested with the entire oil and gas resources in Malaysia, and in 1976, Petronas went downstream when it was chosen by ASEAN to begin construction on the second ASEAN Joint Industrial Project, a urea plant. And ASEAN Bintulu Fertilizer is one of the Petronas subsidiary which is based in Sarawak and now has export ammonia and urea all over the world. The size of the company can be seen on how many of their employees, and there is about 40,000 of employees of Petronas in more than 30 countries. Petronas have 103 wholly owned subsidiaries, 19 publicly owned outfit, and 57 associated companies. Next. And there have 3 subsidiaries of Petronas which has listed in Bursa Malaysia, which are Petronas Dagangan Berhad, Petronas Gas Berhad, and Petronas Chemical Group. The Petronas Group is engaged in a wide spectrum of petroleum activities, which include the upstream exploration and production of oil and gas to downstream oil refining, marketing and distribution of petroleum products, and trading, gas processing and liquefaction, gas transmission, pipeline network operation, marketing oil liquefied natural gas, petrochemical manufacturing and marketing, shipping, automotive engineering, and property investment. So next is about the background of Royal Dutch Shell. Royal Dutch Shell, which is commonly known as Shell, it is a multinational petroleum company created in February 1907, and it is a public limited company which was registered in the United Kingdom. Shell is a parent company which owns directly and indirectly investment numerous companies which constitutes a group. The company of Royal Dutch Shell is more bigger than Petronas, where they have 102,000 employees in more than 100 regions of a country. They have a 4 operations of Shell, which include the upstream, integrated gas, downstream, and projects and technology. As we know that Shell is an international energy company with expertise in the exploration, development, production, refining, and marketing of oil and natural gas, as well as in the manufacturing and marketing chemicals. Shell is the world's largest independent energy company in terms of market capitalization, cash flow from operating activity, and production level. According to Global 2000, in May 2019, that Shell ranked 9th place in the world's largest public companies. Shell has listed as the world's largest corporation for 2009 by Fortune and world's second largest corporation by Forbes, when it increased its revenue by 15 billion more than ExxonMobil. Shell has a strong foothold in liquefied natural gas energy market, the cleanest fossil fuel, and representing an excellent alternative to reduce greenhouse gas emission and combat global warming. Shell is among the top 10 LNG companies and ranked 14 out of the Financial Times Stock Exchange FTSE 100 ranking of women and board and in leadership. So next is about the overview of the industry. In generally, oil and gas is the world's primary resources of energy, And the major players in the oil and gas industry included ExxonMobil, Total, Chevron, Beyond Petroleum, Petrobras, PetroChina, and Royal Dutch Shell. According to U.S. Oil and Gas Corporation 2008, oil and gas industry can be categorized into three operations, which are upstream, midstream, and downstream. Oil and gas considered as the biggest sector in the world in terms of dollar value, as it is a global powerhouse using hundreds of thousands of workers worldwide, generating hundreds of billions of dollars globally each year. Organization of Petroleum Exporting Countries, OPEC, formed in 1960 as 5 countries collaborate to get the best price for their oil. And today, OPEC represents 12 countries which together control 80% of the world proven reserve and 1/3 of production. For National Oil Company, NOC, that's a company that are completely owned by the government. Saudi Aramco, for example, is the largest oil company in the world. And PETRONAS, as the only owned by the government of Malaysia, is involved in the regulation of the industry, trading, and quasi fiscal expenditure. For international oil company, it is privately owned by the shareholder, and there have 6 largest major companies, included the ExxonMobil, Beyond Petroleum, Royal Dutch Shell, ConocoPhillips, Chevron, and Total. Those majors own small share of reserve compared to NOC, but their profit are still very large, often comparable to gross domestic products of many medium-sized countries. The issue of industry of oil and gas can be seen in 2014 when the crude oil price fell sharply to the bottom of $53 per barrel, and now it was recovered. The crude oil price was fell sharply because of the lower demand from China, Russia, India, and Brazil due to the slower down of the economics. And the United States and Canada began to increase their producing oil in their own countries. The oil and gas sector was recovered due to the several factors, where there is a successful of the production restart agreement between OPEC and non-OPEC countries. And they also have a less oil coming to the market from shale producer and an ongoing demand growth estimated by the Energy Information Administration, EIA. In 2020, crude oil price fell sharply once again due to the COVID-19 pandemic. Russia, non-OPEC country, refused to go along with the plan. So then Saudi Arabia, which is the biggest producer of OPEC, has launched the oil price war against Russia. This is because Russia has refused to agree the OPEC's demand to cut 15 million barrels of oil production per day in order a step taken in the face of economic devastation being wrought by COVID-19 pandemic. So then Saudi Arabia takes a selfish response by cut its oil on upward of $6 per barrel. Next, I will pass to Zihui.
Hi, madam. I'm Qin Sihui, and now I will be presenting on the ratio analysis. The first ratio, next. The first ratio is profitability ratio. Return on capital employed ROCE is one of the profitability ratio. Based on the table, PETRONAS has higher ROCE than Shell in 2015 to 2019. This indicates that PETRONAS is better than Shell in generating profit from its capital. Next is gross profit margin. Based on the table, PETRONAS has higher gross profit margin than Shell in 2015 to 2019. This indicates that PETRONAS will have more money to pay operating expenses like salary, utilities, and rent. The next ratio of profitability ratio is net profit margin. Based on the table, PETRONAS has higher net profit margin than Shell in 2015 to 2019. This indicates that PETRONAS is able to translate more of its sales into profit. As a conclusion from profitability ratio, PETRONAS is more profitable than Shell. Now we look into the liquidity ratios. The first ratio in liquidity ratios is current ratio. Based on the table, PETRONAS has higher current ratio than Shell in 2015 to 2019. This indicates that PETRONAS is more capable to pay its short-term obligation as compared to Shell. Next is quick ratio. Based on the table, PETRONAS has higher quick ratio than Shell in 2015 to 2019. This indicates that PETRONAS is more capable to meet its short-term obligation with its most liquid asset as compared to Shell. As a conclusion from liquidity ratio, PETRONAS is more liquid than Shell. Now we look into the asset management ratio. Based on the table, Shell has higher fixed asset turnover rate than PETRONAS in 2015 to 2019. This indicates that Shell has greater efficiency in managing its fixed asset investment as compared to PETRONAS. The next ratio is inventory turnover ratio. Based on the table, PETRONAS has higher inventory turnover ratio than Shell in 2015 to 2019, except in 2018. This indicates that PETRONAS has stronger sales as compared to Shell. This also indicates that PETRONAS does not hold excess inventory or obsolete goods. Next is Day Sales Outstanding, DSO. Based on the table, PETRONAS has higher DSO than Shell in 2015 to 2019. This indicates that PETRONAS is selling its product to customers on credit and taking a longer period to collect money as compared to Shell. As a conclusion from asset management ratios, Shell can manage its assets better than PETRONAS. Now we look into the debt management ratios. Based on the table, Shell has higher total debt to total asset ratio than PETRONAS in 2015 to 2019. This indicates that Shell has higher degree of leverage and higher financial risk. Next is gearing ratio. Based on the table, PETRONAS has higher gearing ratio than Shell in 2015, while Shell has higher gearing ratio than PETRONAS from 2016 to 2019. This indicates that Shell is considered to be highly geared and riskier than PETRONAS. As a conclusion from debt management ratios, PETRONAS can manage its debts better than Shell. Market value ratios such as earnings per share, market to book ratio, price earning ratio is not applicable to PETRONAS. This is because PETRONAS is only registered as public company, but it is not listed on Bursa Malaysia. Its shares are therefore not publicly traded. Next. Now I will be presenting on the cash flow analysis. The first part is the operating activities. The table shows the net profit and cash flow from operating activities of PETRONAS and Shell. Based on the table, PETRONAS and Shell had a positive figure for their cash generated from operating activities. This indicates that PETRONAS and Shell are able to cover the core payments such as interest and tax without taking on extra debt, issuing shares, or selling assets. Besides, the cash generated from operating activities was compared to the profit from operation in order to analyze the quality of the profit. Based on the table, the figure of cash flow from operating activities and operating profit of PETRONAS was more closer than that of Shell in 2016, 2017, and 2019, while the figure of cash flow from operating activities and operating profit of Shell were more closer than that of PETRONAS in 2015 and 2019. This indicates that the quality of profit of PETRONAS is better than Shell in 2016, 2017, and 2019, while the quality of profit of Shell is better than PETRONAS in 2015 and 2018. Moreover, PETRONAS and Shell showed a smaller figure of cash flow from operating activities than that of operating profit from 2015 to 2019, and this indicates that the business are able to turn profit into cash. Next. The table shows the movement of working capital of PETRONAS and Shell. Based on the table, there were no abnormal large increases in receivable and inventory in both PETRONAS and Shell from 2015 to 2019. This indicates that PETRONAS and Shell do not have potential irrecoverable debts. The big increases of inventory in 2016 of Shell was due to the increased production as a result of the acquisition of BG Group plc. Besides, there were also no abnormal large increases in payables in both PETRONAS and Shell from 2015 to 2019. This implies that the positive cash generated from operation of both PETRONAS and Shell are not due to the delayed payment to its supplier in order to improve its cash flow position. Next. The next part is the cash flow from investing activities. Based on the table, PETRONAS and Shell generated a negative cash flow from investing activities. The negative figures of cash flow from investing activities of PETRONAS were mainly due to the purchase of property, plant and equipment, and investment in securities and other investment. The big decrease in cash used in investing activities from 2015 to 2016 of PETRONAS was mainly due to the less expenses spent on the purchase of PPE, investment property, prepaid lease payment, and intangible asset, less investment in associate joint ventures and unquoted companies, and less investment in security and other investment in 2016. The negative figures of cash flow from The negative figures of cash flow from investing activities of Shell were mainly due to the capital expenditure and investment in joint venture and associates. The big decrease in cash used in investing activities from 2016 to 2017 of Shell was mainly due to the acquisition of BG Group plc in 2016, proceeds from the sale of PPE and businesses, and proceeds from the sale of Shell interest in Woodside Petroleum Limited. Next. The table shows the cash flow from financing activities of PETRONAS and Shell. Based on the table, PETRONAS generated a negative cash flow from financing activities. The big difference of cash flow from financing activity between 2017 and 2018 was mainly due to the drawn down of term loan in 2018, while the big difference of cash flow from financing activities between 2018 and 2019 was mainly due to the repayment of borrowings, payment of dividends, and payment of lease liability in 2019. Next. While for Shell had a positive figure of cash flow from financing activity in 2015 and a negative figures of cash flow from financing activities from 2016 to 2019. The difference of cash flow from financing activities between 2015 and 2016 was mainly due to there were more new borrowings in 2015 and the increase in interest paid in 2016, while the big increase in cash used in financial activities from 2016 to 2017 was mainly due to the lesser new borrowing and the repayment of debt in 2017. Next. The last part of cash flow analysis is free cash flow. Free cash flow is used to evaluate the cash available for financing activity, including dividend payment and debt servicing, after investment in maintaining and growing the business. Based on the table, both PETRONAS and Shell had a positive figure of free cash flow from 2015 to 2019, with an exception of Shell in 2016. The positive figures of free cash flow indicates that PETRONAS and Shell have a free cash flow that is available for them to use in financial activities, including payment of dividend and debt servicing. Moreover, Both Petronas and Shell had a quite big figure of their free cash flow. This indicates that they are efficient in generating more cash from its operating activities. The next section will be presented by our friend Wang Yi on the balance scorecard.
Hello, madam. My name is Kong Wang Yi, and I will be presenting on the other three performance measurement tools. The first one is the balance scorecard. So in the balance scorecard, we will be looking at 4 perspectives of the balance scorecard here, which are the financial perspective, customer perspective, internal business perspective, and sustainable development perspective. So for the financial perspective, for Petronas, their objective is to maintain an optimal capital structure and to deliver investment efficiency. So they targeted a CapEx plan of 167.6 billion ringgit in the next 5 years by maximizing the value of integrated production across the value chains through operational and commercial excellence. Meanwhile, for Shell, its objective is to deliver a world-class investment case that stimulates the financial performance, and it targeted a relative return on average capital employed (ROACE) of 25%, as well as 3 years cumulative target of $85 million on free cash flow. So its initiative is to invest in the competitive plan. Next. Okay, under the customer perspective, for Petronas, its objective is to form mutually beneficial partnership and foster trust between the company and the stakeholders. So Petronas has targeted more product awards and more patent awards in the future by engaging with stakeholders continuously. On the other hand, for Shell, its objective is to meet the growing demand for energy and to become more customer-centric by thriving in the energy transition. And Shell has targeted a stronger brand value and relationship with stakeholders of more than 70 operating countries by promoting general principles effectively with customers. Next. Under the internal business perspective, its objective is to, for the Petronas, is to expand core business and to expand leading-edge expertise. And Petronas has targeted a total equity production of 2,354 kilo barrel of oil equivalent per day. By using the initiative at once in digital and technological capabilities through partnerships and research. On the other hand, for Shell, its objective is to improve operating performance and to strengthen the Shell culture and values by targeting on the 3,760 kboe per day, as well as 80% of project delivery on schedule, and also the increase in average employee engagement score, which is the Shell People Survey. Its initiative is to invest in people and capabilities by providing more formal training sections. Next is the sustainable development perspective. For Petronas, its objective is to position the company in new energy play to reduce fatality rate as well as to achieve greenhouse gas emission reduction target. Petronas has targeted zero incident target, as well as zero continuous venting and zero continuous flaring by 2024 and 2030 respectively. Its initiative is by organizing safety campaigns such as regular trainings, awareness programs, and tighter work supervisory. For Shell, its objective is to transition the company to a lower carbon and multi-energy system in order to counter the climate change. And Shell has targeted on reduce the net carbon footprint from 3% in 2016 to 4% in the future. Its initiative is to develop carbon capture and storage CCS, as well as develop new fuels for transport, such as advanced biofuel. Next, I will be presenting on the SWOT analysis. Okay, for SWOT analysis is another powerful performance measurement tool to evaluate the strengths, weaknesses, opportunities, as well as the traits of the organization. So under the strengths aspect, for Petronas, Petronas is actually a brand name presented in the renowned international auto racing events. And Petronas has ranked in Fortune Global 500. And Petronas has strong financial performance over the years because Petronas is more profitable and more liquid as compared to Shell. For Shell, its strength is one of the world's largest independent energy companies, and Shell has a strong foothold in liquefied natural gas LNG market. Shell is diversifying into business other than oil and gas field by diversifying into electrical power as an initiative to combat the climate change as well as for the company's long-term prospects. Under the weaknesses, for Petronas, Petronas actually has excessive concentration in the oil and gas activities. And Petronas have the majority of their business interests in the oil and gas industry, which may be a risky prospect in the long run. Petronas has also ethical issues such as taking undue advantage of the state support and also poor working salary for the employees. Petronas has also contingent liabilities such as legal lawsuits with the Sarawak state government. For Shell, Shell also has weaknesses in the ethical issues. For example, the oil spill in the Nigeria. Next, we'll be looking at the opportunities aspect. For the Petronas, the rising demand for the liquefied natural gas LNG globally is one of the opportunities for Petronas. Liquefied natural gas LNG is a liquid form of natural gas and is the cleanest burning option among the fossil fuels, which will help to reduce the global carbon dioxide emissions and public health. Another opportunity for Petronas is the oil and gas discoveries. For example, Petronas has oil and gas discoveries in Canada. Meanwhile, they have new collaborations and market opportunities as well. For Shell, same as Petronas, they have a rising demand for liquefied natural gas LNG globally, as well as the oil and gas discoveries in Gulf of Mexico. Another opportunity for Shell is the growing market for biofuels worldwide. Next is the trade aspect. For Petronas and Shell, both of them have this trade called as volatility in crude oil prices, whereby it is affected by the supply of the crude oil by the oil production countries as well as the demand of the crude oil worldwide. Besides, the demand from pressure groups on the climate change issues also concerning the Petronas and Shell. Petronas and Shell also face intense competition from the competitors such as the British Petroleum BP and Chevron. Another trait of Shell is the disruption of operation by the cyber attacks. Shell relies heavily on the IT systems for operation of business processes and is often the target of the cyber attack. Next, I will be presenting on the pestle analysis. Okay, pestle analysis actually helps us to analyze on how the external forces could directly impact Petronas and Shell businesses. So we have 6 aspects here. The first one is the political. So we have Middle East turmoil aspect as well as OPEC announcement aspect. Like for example, under the OPEC announcement factor, the OPEC actually accounts for a significant amount of the world's oil supply. Therefore, the significant impact brought by the OPEC decision can actually impact Petronas and Shell businesses. For example, the Saudi Arabia-Russia oil price war occurred in March 2020 has brought a severe impact to the world. Under the economic aspect, we have unemployment rate factor and also the foreign exchange rate factor. For example, under the unemployment rate factor, the high unemployment rate actually indicates a greater labor supply. Thus, it will help to lower the cost of wages of Petronas as well as the Shell. However, the purchasing powers will decrease and therefore create a cascading effect to both Petronas and Shell businesses. Next, we'll be looking at the social aspect. We have demographic factor as well as the security and health issues factor. So for example, under the demographic factor, the aging workforce is concerning Petronas and Shell businesses because the potential loss of talent resulting from older workers retiring or leaving the companies can bring severe impacts to Petronas and also Shell businesses. Another technological aspect, the recent technology development by the companies can impact Petronas and Shell businesses also. Like for example, the industry's first 3-party collaboration, US oil and gas supermajor Chevron teamed up with the world's biggest oilfield services firm, Schlumberger, and with tech giant Microsoft, is actually impacting the Petronas and Shell because the technology development by the competitor might reduce the competitive advantage of the Petronas and Shell in technology development. But on the other hand, it can motivate them to focus more on technology and innovation development in the future. Okay, next is the environment factor. Under environmental factor, we have climate change, depletion of natural resources, and unpredicted global pandemic, which could impact the Petronas and Shell businesses as well. Like for example, the unpredicted global pandemic, the COVID-19 pandemic will cause a severe damage to both Petronas and Shell. Under the legal aspect, we have health and safety laws factor. Like for example, in United Kingdom, Health and Safety Executive HSE is responsible for regulating the risks to health and safety arising from work activities in the offshore industry. Therefore, Petronas and Shell businesses should focus more on these health and safety laws from every country. Okay. Next, I will be passing on to my friend to talk more about the other aspect.
Okay, now I'm going to present about the corporate governance, strategic policy and implementation, and also the company agency issue. So let's start first with the corporate governance. Both Petronas and Shell emphasize high standard of corporate governance, where corporate governance ensures efficiency, maintaining accountability and transparency, and essential for their business integrity and performance. Since both companies have different backgrounds, where Petronas is wholly owned by nation government, while Shell is a multinational company, they come out with different code of ethics in conducting their business. Petronas adopt Code of Conduct and Business Ethics Code. It is general reference for use in all countries in which Petronas conduct operation. Under Kobe, Petronas reserve the right to modify, revise, cancel, or waive any policy, procedure, or condition without notice and without revision to the code. Provision of the code may be modified by Petronas to adapt them to local laws and conditions. Shell follow the corporate governance principles set out in the United Kingdom Corporate Governance Code. As a multinational company, Shell also adopt New York Stock Exchange Code. NYSE allow foreign private issuer like Shell follow home country practice on most corporate governance matters, but they are required to disclose any significant ways in which their corporate governance standards differ from those followed by US companies. Through NYSE, Shell able to sustain their business activity in all over country they collaborate. Now we move on to the strategic policy and implementation. Next. In 2015 and 2016, Petronas outlined 6 strategies, which is cash generation, cost efficiency and process simplification, project execution, technology as a differentiator, teaching talent, and culture change. And in 2017 onwards, Petronas outlines 3-pronged strategy, which is maximizing cash generator, expanding core business, and stepping out. Maximizing cash generator is Petronas improve their cash generator. Expanding core business is Petronas try looking way to external their value chain. And the stepping out is Petronas looking at potential of being involved in the renewable energy such as solar and other new energy. And for Shell, Shell have strategy ambition, which is thrive in the energy transition, world-class investment case, and strong license to operate. Besides that, Shell also have strategic themes, which is core upstream themes, leading transition themes, and emerging power themes. For the core upstream theme, Core upstream streams is central to Shell, and it will sustain their strong cash generation through the coming decades. For the leading transition team, this it is business where Shell already have a leading position in the industry and are critical for them to capitalize on the energy transition to a lower carbon future. It is focused on integrated gas, oil product, and chemicals. And for the emerging power teams, Shell focused on creating business model to support the evolving customer demand for more electricity through the energy transition to a lower carbon future. And Shell also aim to become as integrated power players and grow over time a significant new business. Besides that, Shell also appoint several new board members to overcome corporate issues that happens in their board management. And now we move to company agency issue. In company agency issue, both Petronas and Shell have a lot of company agency issue happen in their either in their board members and also the internal and external of their company. For Petronas, as a wholly owned company by Malaysian government, Petronas performance always influenced by Malaysian current government situation. We can see major change happened in board position in Petronas, affected by the government's change in Malaysian general election, 14th general election, where Pakatan Rakyat take over the Malaysian government. Many of the board members in the Petronas are resigned because of the change in government. Disagreement between Petronas CEO and Malaysian current Prime Minister Muhyiddin Yassin also lead to resignation of the Petronas CEO. And we can see also disagreement between Petronas CEO and Malaysian sixth Prime Minister, which is Dr. Mahathir Mohamad. So many who control the governments will affect the Petronas in what they do. And now we see Shell. Shell is a multinational company. They involved in many corruption issues, and corruption issue being major issue for Shell for several years already. We can see here, Shell facing criminal charge over 1.3 billion US dollar Nigeria in deal. And Shell also facing one of the biggest corruption issue because of the Nigerian cases. In 2015, Shell had been in top list of NGO most hated brand in the United Kingdom because of their bad image in what pollution they have made and bad image because of the corruption issue that they involved. Besides that, Shell also involved suspect link to 1MDB, Malaysian biggest corruption issue, where Shell been suspect do money laundering for the M1DB. So that's for me. Now I will pass to Jorin.
Okay, I'm Jorin, and I'm going to present on the risk management. The risk management practices for both Petronas and Shell are being assessed and evaluated to compare the effectiveness of their risk management framework. For Petronas, financial risk is being determined and it comprises credit risk, liquidity risk, and market risk relating to interest rate, foreign currency exchange rates, equity prices, and commodity prices. To mitigate these exposures from a business perspective, Petronas enters into various financial instruments. Petronas operates within policies, guidelines, and procedures designed to ensure that risks are minimized. All financial instrument positions are marked to market by independent risk management department and reported to management for performance monitoring and also risk management purposes on a daily basis. However, we could not detect detailed information on the non-financial risk in Petronas. Moving to the risk management process, the risks across Petronas are being managed on an integrated basis, and evaluations of those risks are incorporated into the decision-making process. PETRONAS has in place an ongoing process to manage principal risks affecting the achievement of its business objective, and this includes identifying, evaluating, managing, and monitoring these risks. The PETRONAS Board Charter includes risk management and also internal control oversights as one of the main functions of the board. It is supported by the following committees, which are Board Governance and Risk Committee and also Board Audit Committees. For the group-wide implementation of risk management and also internal control is then supported by Executive Leadership Team and also Risk Management Committee. For the risk management framework of and internal control of PETRONAS, PETRONAS provides continuous risk management capability development and knowledge sharing programs in order to build highly capable practitioners to meet risk management requirements. So the PETRONAS risk policy, complemented by the PETRONAS resiliency model, provides an integrated and holistic view of the overall strategy to manage the group's risk. Under the risk policy, it consists of enterprise risk management, crisis management, and also business continuity management. Enterprise risk management is to provide a guide to systematically identify, assess, treat, monitor, and also review risks. It aims to improve the ability to reduce the likelihood and or impact of identified risks that may affect the achievement of the business objectives. The second one is crisis management. It is an integrated process that aims to prepare an organization at both domestic and also international operations to respond and manage crises in the risk areas to protect people, environment, asset, and also their reputation. For business continuity management, it is a management process that aims to build the capability of PETRONAS to recover and also continue delivery of products or services at acceptable predefined levels following any prolonged disruption. For the internal control, as part of the PETRONAS resiliency model, internal controls were developed to facilitate standardization of processes and also practices. The focus risk areas are such as financial, health, safety, security, and also environment, plant and facilities, project, procurement, information and communication technology, reputation, human capital, and also the country. On the other hand, Royal Dutch Shell identify and disclose the financial as well as the non-financial risk factors that could have a material adverse effect for the investors. The risk factors listed are also provided with respective solutions taken by Shell to mitigate or to resolve the risk. Just like PETRONAS, Shell also determine the financial risks such as market risk, capital market risk, credit risk, and also liquidity risk. Shell utilizes various financial instruments for managing exposure to foreign exchange and also interest rate movement. Its treasury operation are highly centralized. Treasury standards are applicable to all subsidiaries, and each subsidiary is required to adopt a treasury policy consistent with these standards. These policies cover financial structure interest rate and foreign exchange risk management, insurance counterparty risk management, and the use of derivative contracts. Moreover, their portfolio of cash investment is diversified to avoid concentrating risk to any one instrument, country, or counterparty. The non-financial risks detected by Shell are country risk, environment risk, health, safety and security risk, social and political risk, property and liability risk, and also technology risk. For the risk management process of Shell, an annual review of the effectiveness of risk management and internal control was carried out by both the Executive Committee and the Audit Committee. Regular reviews are performed to identify the significant risks to financial reporting and the key controls designed to address them. These controls are documented, responsibility is assigned, and they are monitored for design and operating effectiveness. Controls found to be ineffective are then remediated. Emerging risks are identified through the monitoring of external development, risk indicators, learning from incidents and assurance findings, and through the appraisal of Shell's forward-looking plan. For Shell's risk management framework, Shell has developed a risk appetite framework that considers three distinct factors. The first one is strategic risk appetite. It is about the current and future portfolio consideration, examining parameters such as country concentration or exposure to high-risk countries. Operational risk appetite is about material operational exposure and promotes a more granular assessment of the key risks facing the organization, while conduct risk appetite brings together leading and lagging risk indicators to provide an overall view of the culture of the organization. Okay, we'll discuss on the capital and ownership structure. Looking at the capital structure, okay, we are referring to a firm's financial leverage ratios, such as debt ratio and also debt to equity ratio. As you can see, Shell possesses more aggressive capital structure as compared to PETRONAS. Shell has a higher leverage ratio with a higher debt ratio and also debt to equity ratio. However, greater risk might bring advantage. As we know, higher risk, higher return. Shell has greater business growth rate as compared to PETRONAS. Overall, both of the company possesses an equally well capital structure. Next, we'll be looking at the ownership structure. As we know, PETRONAS is a state-owned oil and gas company in Malaysia and also the custodian of the nation's oil and gas resources. Therefore, the establishment objective of PETRONAS is to assert national rights over the use of the country's resources. PETRONAS' parent company is registered as a public listed company, but its stock is not publicly traded. It is governed by a separate act, which is the Petroleum Development Act 1974. The establishment of PETRONAS is not for maximizing the benefits of investors, but to protect the national rights and fulfill the national obligation. However, PETRONAS has already listed 3 of its subsidiary companies, which are PETRONAS Chemical Group Berhad, PETRONAS Dagangan Berhad, and also PETRONAS Gas Berhad. For PETRONAS Chemical Group Berhad, Malaysian government holds 64.3% ownership. For PETRONAS Dagangan Berhad, Malaysian government holds 63.9% ownership, while the PETRONAS Gas Berhad, Malaysian government holds 51% ownership. The major shareholder other than the Malaysian government are Employee Provident Fund, Kumpulan Wang Persaraan, and also Pemodalan Nasional Berhad. For Shell, Royal Dutch PLC is the parent company of the Shell Group. The ownership structure of Shell is an international public limited company which designated a limited liability company that has offered shares of stock in the public. Its stock is publicly traded on London Stock Exchange, Euronext Amsterdam, and also the New York Stock Exchange. As Shell is a merger of the 2 companies, they have 2 types of shares. So Royal Dutch Petroleum Company's investor, they have 60% stake in Shell with Class A share, which we call it as RDSA, while the former Shell Transport Trading shareholders have 40% stake through Class B share, we call it as RDSB. Currently, 33.3% of RDSAs are institutional ownership. RDSB stock has 48.73% institutional ownership, and Shell's largest institutional investor in terms of RDSA is the Vanguard Group, and the largest RDSB institutional investor is Capital Research Global Investors. The major shareholder of the Shell Group is a Dutch investing holding company with 21.19% total shareholding. For the next session, we'd like to invite Si Hui to explain more about it.
So I will be presenting on the financial performance of both PETRONAS and Shell. Both PETRONAS and Shell are able to generate profit throughout the 5 years, which is from 2015 to 2019. Their performance deteriorated in 2016 and 2019 due to the lower oil and gas prices in 2016 and 2019. However, they still manage to earn revenue to cover their day-to-day operation expenses. Based on the ratio analysis, PETRONAS is more profitable and more liquid as compared to Shell. This indicates that PETRONAS is earning more and is more able to pay off its short-term debt obligation than that of Shell. PETRONAS is also more efficient in ensuring that the business earns sufficient returns to its provider of finance, debt, and/or equity as compared to Shell. Shell is performed better in management of assets compared to PETRONAS. Shell managed to earn more profit from utilizing its assets. In terms of debt management, PETRONAS is performed better than Shell. However, this is due to PETRONAS is a state-owned company which it is financed by the government of Malaysia. Both PETRONAS and Shell have strong cash flow. They are generating more than enough money for their day-to-day operations. The next section will be discussed by Jani on the future potential.
Thank you, Zihui. And now, I'm going to present the last part of our case analysis, which is about the future potential of PETRONAS. From every part of an analysis of the cooperation between PETRONAS and Shell, we have analyzed that PETRONAS has a good future potential to become a recognized global company, as it is performed very well in their business as compared to the foreign oil and gas company, Royal Dutch Shell. Shell, as the largest company in oil and gas industry, could be a role model of PETRONAS. So, the future potential of PETRONAS to become a recognized global company can be analyzed through its performance measurement under the 5-year of review, which is from 2015 to 2019. Under this 5-year of review, we have analyzed that PETRONAS has doing as good as Shell or even better than Shell. This is because PETRONAS has able to translate more its share into profit and also making enough money from its ongoing operation to cover operating expenses and also variable costs as well as its fixed costs. By having a supporting from the government, we have analyzed that PETRONAS has earned more money on less investment, and this means that PETRONAS performed well better than Shell in terms of debt management. So in terms of profitability and liquidity, PETRONAS have a potential to improve and manage their performance very well. Based on ownership status, PETRONAS as a state-owned oil and gas company has more potential to survive in oil and gas industry in the future than limited public company, Royal Dutch Shell. And any decision they made by the government will affect the performance of PETRONAS. So here we can see the difference of PETRONAS and Shell, where PETRONAS focus is not put too much on customer relationship, but it focuses more to improve the company beneficial and relationship among company and shareholder, and also to protect the national rights and fulfill the national obligation. However, the Shell focus is more customer-centric and on delivering cleaner and competitive energy to their customer. Shell is emphasized on the relationship with customer and other stakeholders to build their brand value compared to PETRONAS. PETRONAS have a potential to become a big competitor among the other company in oil and gas industry in the world. So on the SWOT analysis, so we can analyze how PETRONAS can become a recognized company. So in here, we can see that PETRONAS was doing good and performed very well as Shell. And on the strength analysis, that the gap of revenue percentage between PETRONAS and Shell are not too higher from each other. So to reduce a gap of revenue percentage, PETRONAS have to look forward to Shell on how they can become very well on their revenue percentage. And also, PETRONAS should take an opportunity to recognize Royal Dutch Shell as their role model. As Shell, we know that has a strong foothold in LNG market and also among the top 10 LNG companies. PETRONAS also need to take ownership of how Shell has done behaving a new future strategy. By year 2030, Shell aims to become the world's largest power company. By having a good corporate governance, it will consider the future potential of Petronas, and from every analysis, we can say that Petronas have a strong corporate governance in making any decision. Petronas have very good framework of corporate governance where it clearly defines role and responsibility of the board and the management. Petronas comes out with various strategy, policy, and implementation in order to embrace the best governance practice, which ensure effectiveness in Petronas and internal and external control. Rather share follow New York Stock Exchange NYSE code, which make them able to sustain their business activity in all over country they collaborate. Both Petronas and Shell, despite their corporate governance is good part, they are unable to manage its internal issue when they have many agency issues faced by both companies. So that Petronas need to manage their relationship with the Malaysian current government and vice versa for Malaysian government. For overall, Petronas saw good strategic policy and implementation where they are able to achieve the objective set for the year under review. So that's all from us. Thank you.